Taxes and Bitcoin. There's all sorts of different theories of what will happen into the future, and I'm going to tell you mine. This was inspired by a comment from friend of the channel here, Naughty Vlogs. They asked, I would be interested in hearing your thoughts on governments taxing Bitcoin in the future. For example, are they going to have a property tax like on houses, but with Bitcoin, or make you pay taxes in Bitcoin? Or what other ways governments are going to try to get Bitcoin from their people? Could be a good video about non-KYC Bitcoin or stuff that has to do with that. So we're going to get into all of that. But first, my name is Forrest Hodel, and I'm a Bitcoin coach and educator. And if you want to book me for a one-on-one session to cover Bitcoin basics, security best practices, Bitcoin treasury companies, and whatever other questions you might have, you can do so through the link in the description. So I think what Naughty Vlogs here is kind of getting at is that Bitcoin is a scarce asset that is desirable. And when that happens, the government is going to want to have some of that. And his question here is, how will they get that? Will there be additional taxes on Bitcoin that they take in Bitcoin, or is there some sort of way that they can sort of acquire Bitcoin from you? Now, what's very interesting about this, of course, is if you have self-custody Bitcoin, no one can take it from you at all without coercion. So without them asking you for it, demanding it from you, maybe under threat of violence or something like that, but they cannot take it from you. If you have your money in a bank account, the bank controls that money, and the bank can collude with an organization and they can take your money from you. If you have your wealth in brokerages, the brokerage can do the same thing. Bitcoin in self-custody, protected by a seed phrase and hopefully passphrase as well, is a bearer instrument. The ownership is the private key, and you are the only one that knows that private key because you have a hardware device that generated that private key for you, and it's never been online, it's never been shared with anybody. So with that type of instrument, you have control. You have control of who you're willing to give it to. If there is some sort of property tax on Bitcoin, and a property tax, in my opinion, is very similar to an unrealized capital gains tax. And if there was that on Bitcoin, they would have to know how much Bitcoin you have. They would have to prove that you own it, that you didn't send it to somebody else, that you didn't lose ownership of it. And they would have to tax you on that, and it would be up to you to give that to them. They couldn't take it from you. So a property tax is very, very unlikely because there's no, or it's very difficult for them to enforce the taxation from a physical standpoint if a bunch of people did this. Things that are taxed are very difficult things to keep safe. So property is taxed because you cannot keep it with you. You cannot bring your property with you. You cannot move jurisdictions. You are locked into the governing body that taxes that. Same with income tax, that's very jurisdictional. Bitcoin is global, and there are assumptions to be made with who owns what. And when you throw doubt into the assumptions, then it's sort of on the whole system that, is trying to get at it to prove and coerce, again, you to give up this sort of property tax if there was one. So of course, there are reasons that we pay taxes, and we can debate whether they're right or wrong, but if you live in a jurisdiction, you're going to pay those taxes, and you are not going to be, because there is a threat of violence over you, basically. You're either going to get fined into oblivion or jail time, and that is physically taking your body and placing it somewhere and against your own will. That's the threat of violence that keeps you doing that, which is, the system we're in, and we should all, participate in that system in the ways that we see fit. And basically what is going on here, though, is there's the ability to own something and to take it with you and to secure it in a safe way. And therefore, you have the ability to move it. And when you have the ability to move your assets from a jurisdiction that is unfair, right? There's levels of fairness of governments, and you can look at the entire spectrum of that. And within those governments, there's land that is under those jurisdictions. And if you move yourself to a more fair jurisdiction, you are protecting yourself, but you're also bringing your wealth with you. And wherever you are as a wealth owner, you are going to spend wealth. So, and the government will, even if they have a lower tax rate or more preferential tax treatment or something like that, they will still benefit from you being a wealthy individual participating within their economy. So this is a thesis that is brought up by The Sovereign Individual, which is a book. And the thesis is that in the future, there will be governments basically competing to be the most favorable jurisdiction for people with these assets that they can truly hold themselves. So I actually think that tax treatment for Bitcoin is at its peak worse at this moment right now. It's going to fluctuate a little bit, but I think that it's only going to get better. We can see some favorable concepts and some favorable ideas around it in the US. We can see places like Portugal, Germany, even the UK. They all have slightly preferential treatment of Bitcoin if you hold it for a certain amount of time. And this has actually caused Bitcoiners to move to jurisdictions that are favorable. And as Bitcoin becomes more and more of what the store of value is, and it demonetizes real estate and bonds and gold and stocks, then the government has a higher incentive to incentivize those individuals to stay within their regions or to migrate to their regions for preferential treatment. So I actually, again, see the tax treatment for Bitcoiners becoming better and better over time. There is a short-term thinking and there's a long-term thinking for governments that want to acquire Bitcoin through their citizenry. And all their acquisition is through citizenry. It's all, taking from the people around them. But there is a way of doing it where they take too much or they take less. And when they take too much, that's a short-term thinking mentality, because that's going to drive the wealth out of that region, whether they take it, squander it, and it moves naturally into other jurisdictions as they import and have to spend that Bitcoin or whatever, or it drives the individuals that still have some wealth retained out of that jurisdiction. So that's a very short-term way of acquiring Bitcoin as a government, by upping the taxes, by creating a property tax. These kind of things will drive the wealth out of their nations. And so the long-term thinking is that a government will make it more tax advantaged and therefore draw wealth into their country, making everyone within their nation more prosperous for doing so. So that is the future that I see. I see myself outweighting capital gains tax here in Canada. We'll probably be really late. Canada is making all sorts of stupid decisions, and we'll probably be very late to getting rid of the capital gains tax, but I don't mind waiting. I'm able to wait with my Bitcoin and just allow it to accrue value, allow it to demonetize all other assets. And once the capital gains is off, I'll be able to use it as a currency, as a peer-to-peer, medium of exchange. And until then, it works perfectly as a store of value. And my belief with money is that it goes from collectible, store of value, medium of exchange, unit of account. And these things can lap over each other occasionally, but that's the general trajectory of these things. And we are currently in the collectible stage, and the narrative is that it's a store of value, and it is a store of value. It's a medium of exchange. It's a unit of account. It's all of those things subjectively to the individual. So I believe that the narrative is being pushed as store of value. And once, again, all of this plays out, it's to the advantage of all the companies to lower the tax rate on something like Bitcoin so that they can acquire at least some of it, and it'll start moving around, and they will be able to acquire little bits and pieces of it and build their wealth as a government, because that is their goal as well, is to fill their coffers with as much Bitcoin as possible, whether they know it or not. And the ones who know it will be the future leaders of the globe, because they are acquiring a finite asset with infinite demand. Love to hear what you think, though. If you have a different opinion, Of course, there's, again, two different ways. They could go totalitarian, sort of steal all your wealth way, short-term thinking, government will collapse. They could do long-term thinking where they allow prosperity within their country and they have very minimum amounts of tax on people that have Bitcoin. We'll see how it goes. I think, the nations that go one way will succeed. The nations that go the other will collapse. So we'll see how it all works out. And again, my name is Forrest. If you want to book a one-on-one with me, links in the description. And if you wanted to get some things that you need as a Bitcoiner, I have links for Bitcoin Well. It's a exchange where you can sign up and use my code and get free Bitcoin on sign up. You can also check out the BlockStream Jade, which is a beginner intermediate wallet, Bitcoin only, and it's a great wallet. And you can check out the Stampseed kit, get 15% off using my code linked below, and the Start9 store. I have a 5% discount code there as well. And you can check out Sats Arcade, which is a play-to-earn gaming platform that I co-built, and you earn sats from playing some classic arcade-style games. So check that out, and thanks everybody for watching, and we'll see you on the next episode of Bitcoin, Not Crypto.